Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So another strong day in the market. Definitely lots of volatility, lots of misdirection type moves. Yesterday was not the easiest day to deal with, right? You had the Monday, Tuesday move, nice inside day, then all of a sudden, pow, that Greece news came out. Market dropped 15 handles, was down 10 handles overnight. You wake up in the morning thinking you're going to have opportunities, and P.S., they're right back to where they probably got you out of some of your stocks, and then you had to just block that out of your mind and move on. And if you did that, there was definitely some money to be made today. You just had to really work hard versus, getting a free lunch by buying it after hours, like some guys did with the spiders down $1 in some of those stocks. So anyway, let's look at the chart. You look at the spiders, you'll see, there's a lot to learn from this range. There's a lot to, ways to look at it so you could pretty much figure out what you've been doing wrong, what you've been doing right. And I know coming in on Monday, including me, I had short in the brain. You had the spiders below the 8 and 21 day looking like it's going to break down. This looked very much like that head and shoulders formation. And what happened? It traded below 199.13, which you've heard me say that pivot so many different times on Twitter. Went below it and then came back above it. That's what this was. That is your definition of a red dog reversal. You do not get overly bullish. You don't get, go out and buy a stock with your mom's money or whatever it is, but you say, okay, it held here. Let me get short off the brain. Let me cover. And usually, I actually get long in something like this because I feel like we'll get some follow through, but, I was just happy to get short off the brain. Then you had your follow through. Look at that follow through in the spiders. What did we do? Cleared the 8 and 21 day, went back above it, right? Back above it, showing some power, something different. Okay, so that could have got you out of your short from here. So then, yesterday you had that inside day where if you weren't trading it, it didn't look like much. And then all of a sudden we closed near highs, and now we're knocking on the door of this level right here, which is coming right in front of a jobs report. So with that being said, you just had a pretty sizable move, and who knows if they just blow through, squeeze leftover shorts, make people chase, and this is your next level, or if we do some sideways action, which I would rather have, but you never know. One thing we've been focusing on is the Russell. The Russell actually went through that level with authority already. Okay, so it's leading the way somewhat. So in my opinion, I think this will be at new highs well before the S&P. Above the 8 and 21 day, here is your red dog reversal there. So if you happen to be out of it, not knowing what was going to go on this switch, you could have said, okay, it's back in the game. Maybe you got long versus gap, and then there you go. I'm not sure if it's going to keep going just like this or might need to go sideways, but I'm probably going to try and stick with this as a swing trade to make new highs. Look at the mid-caps. The mid-caps already did that. MDY, there you go. Above the 8 and 21 day, regroup that right there. Look at the size of that. Red dog reversal right here. Traded below. This is so basically a red dog reversal is how to find an entry of a counter trend move. And from here all the way down to there, that gave you your entry with the stop. And now look where it is. So, that's actually somewhat healthy. If you look at the XLF, not much health there except for trying to repair somewhat. You've had your little red dog reversal down here when it reclaimed the 200 day, and now it's coming into resistance. We'll see what happens there. I actually went along a little Morgan Stanley just because I figured if the market does continue, they'll start coming after some of these, and there's a little tight range right here where you could be long, tier 1, and then if it trades above this 35.20, maybe next time it actually gets through this and goes a little bit higher. Goldman Sachs, I think, already went through that little spot, or trying to, but this is not really where the money's being made. I just wanted to put some money to work besides the IWM and Apple and some of my other things, which we'll get into. So the indices right now, looking somewhat healthy, right? You didn't look healthy on Monday, but things change, so you change as a trader, okay? You go to some stocks. So let's go to oil first, USO. Held in there. Okay, we talked about it coming in a little bit too much, which it definitely shook the tree somewhat. Then opened above it. Didn't have a big day like that day, but still, in the game, trying to figure out what's next. You have support going sideways now, and we'll see if a new channel forms where it can go back and forth. Let's look at the XLE. What'd you do today? XLE actually acted better and still trending. And if you look at the chart here, you'll see that this has been below the 200 day for quite some time. It's been below the 8 and 21 day. Finally here got back above those moving averages. So if you did not switch gears, if you wanted to be long XLE this year and we're waiting for an entry, oh, what a coinky dink, a red dog reversal right there. and that is at 72.88, or you could have waited for a higher low, or you could have waited for them to reclaim the moving averages. And now we'll see what happens here if it takes out a bigger resistance on its way back to potentially fill that gap. So lots going on, lots of things moving. Not everything moves the way we want it to move, but you have to let it go. There's a long year ahead of us. It's February. So just because things have been choppy, that's what they do. Ranges are meant to wear out the shorts, wear out the longs before you get some kind of move, because the market doesn't want everyone to ride along for free. Otherwise, everyone would be doing it, and that's not the case here. As far as stocks are concerned, let's go through high beta. First is first, Netflix. A little choppy up here. You have easy trades or good setups. This was your earnings gap. Above this, to me, was a good setup. Gave you a streaky move. Here was another decent one, and now it's getting a little wishy-washy. So just be a bit careful. Does it mean it's over? No, but it's come a long way. So I guess see if it holds, lets the moving average catch up before it goes again. I'm not really that interested. Amazon did the same thing. Amazon gave you the gap up, gave you an entry above 359, and look at that all the way to 380 where it was some resistance. And now I think that easy part of the trade's over, so you move on. Google still doesn't really know what it wants to do, except for if you take a step back, the reason why it's lagging is because it's below all the moving averages. It's been a laggard for over a year, but it definitely is still above the earnings gap. It's getting tighter, so at some point, if you see heavy volume one of these days, we can get a trade here above 537 to 540, but then there's still a mess of resistance, so you got to be careful there. Apple, the last 2 days, not very impressive, but overall still hanging in there. Didn't want to give you an easy move through this 200, but it's still right there. It's still above its earnings gap, and I do think at some point it gets going. I mean, those options, I'm still in the stock. I've been trying to trade it. You're almost better off just buying it versus here like we talked about and not really overlooking at it. Look how choppy this was, after this earnings, and it wound up going from almost 100 to 120. This is when the moves actually got better after this consolidation. Wide range bars got wider. Here, they've been a little bit intact, but now the ex-dividend's out of the way. Typically on option X, it's not great either, so maybe next week that'll be something good. If you look at some of the social media stocks, right after the close, LinkedIn wound up, it didn't look to me as if it was a stellar report, so I didn't play it, but guys like Sperling and Lou, they were playing it above the pivot. If you knew your pivot, you didn't have to go in long. Look at this nice setup above the moving averages. Must be in some institutions' hands. You could have been a buyer above 240, went to 255 and change. What I was focused on was Twitter. A lot of guys have, that follow me on the virtual trade floor or in the morning note or got the thesis. I said, this is the one that I want to focus on for this year. Last year, it was Facebook. Actually, the last 2 years was Facebook. And before that was LinkedIn, and that was when it was 90. So anyway, Twitter, I've had the options for about a week and a half already. Today, what I did is I took, I sold the ones that I had that expire tomorrow, which were from $1.80 to almost $4. That was a good trade. And then I took the ones I have for next Friday. I sold some 47s. So that I think I paid $2.20, took in $1, which made me, cost basis $1.20. If it goes to 47, that's almost $6 on $1.20. That's a nice percentage move. Few hundred, that's 600%. And then I have 5 open just in case. When I walked in here, it was trading about 45.5. There was also a very good after-hours trade. Now, I know you watch the videos. Everyone's loves to recap, for next day type thing. But people always say, what's the difference between the VTF and my note, or what's the difference between the VTF and just what you put on Twitter? Difference is you get to hear me talk. You get to see my positions live. I had no position in Twitter going into the earnings besides my options, because I don't take stock into earnings. I wait to see it react after. And once I saw the numbers, I saw it got hit. I'm like, these numbers are great. There might be, whatever the active users, I don't think is going to be as important. So PS, I think we were buying it somewhere around 39, went green on the virtual trading floor. A lot of people bought it also. Boom, 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 sold at 42 and change. The morning high or the day's high was 42.50, so another way to day trade it, traded through that, made another point or so, done trading Twitter. Now I'm going to let the options work out. You look at the stock, and you see where it is here. Just level-wise, I said this 44 was a level. It stopped here and then traded through it. Your next level comes in a little bit closer. The reason why I did a 47 call spread, because this was my buy above resistance, which we did it here. And I figured if it fills the gap up to 47, that would probably be, really a spot for resistance. So why not take the money in from there? And we'll see what happens tomorrow. We'll see what Mr. Costello says on on the conference call. Hopefully it's good. He's going to be on CNBC tomorrow, and this stock was a really good stock for us, especially here when it was above the 8 and 21-day boom. And now you look at it, it's been going sideways. We all use Twitter. I know if someone said, what are you going to, you have to give up Facebook or Twitter, I'd have to give up Facebook versus Twitter, because it's been a great way to find like-minded traders around the world, communicate, get information fast. We get news on Twitter, and it's on, I hate to say it, if I'm on the network, CNBC or Fox Business, it goes on those networks like 4 minutes later. It's crazy when you see crazy important news. It happens on Twitter first. Movement, people spot it on Twitter first, and then 3 to 4 minutes later, they do a breaking segment, and meanwhile, it's old news already. You could probably sell into that. But anyway, so we'll see how that goes tomorrow. Facebook has been a non-event, out of play. From what I'm being told from institutions, it's really the overhang from WhatsApp. They need to get out of shares, and institutions don't want to pay up for it, so they're accumulating it in this zone. At some point, maybe it'll break above this, and for now, it's just not there yet. I am long a little Russia, and this is a very big spec play, guys. There was news out there that Germany's going to Moscow with France and to broker a deal for a ceasefire. To me, this looks like a long-term channel where at some point it breaks above it, and perhaps on a ceasefire that's the case. And if that's the case, you could fill this gap and maybe even go a little bit higher. RSX was as high as 28 here, and if you go all the way back, I think what was back yeah, it's just it's just a trade. Yeah, if you didn't want to be long it just because who knows what could happen, the options. I think the 15s for next Friday, because if it's going to go, I think it goes before next Friday. We're like $1.05, so only 30 cents in premium, and then at least your risk paid is about $1. Versus if something blew up and it went to 12 again, that would be a little bit more risky than holding the options, plus a little less noisy. Some of the software stocks went today. Last week, tweeted it. The VTF saw that I was long FireEye because I haven't been trading it well, but it's in my thesis and my report that I think FireEye, has big potential this year. Had a really big run, lost its momentum when it broke the 8 and 21-day here. And that was when you said, okay, it's over. Actually, you could have said it's over right here. Just showing you how you watch a trend develop, and then when it changes, you change. Here is the long base, gap up, flag, and then it hovered and followed the 8 and 21-day all the way to this king and queens formation where it gapped up, got negated, down. This is what you call an island top, friends. That means game over. If you didn't want game over there, here's when it broke the 8 and 21-day. That was when it was game over. So PS, long channel going sideways. I'll show it to you on the weekly, I guess. It's a little easier to see. And I do think that we need security software, and now that it's been accumulated enough, it could see. I think one of my targets was close to here, and then who knows, maybe even gets close to 50 this year. So FireEye, I'm in the calls, and I think option earnings are the 11th or so I might add. But overall today, it did clear this range and did reclaim its 200-day, so we'll see what happens there. My other one in that sector was CyberEye. Hasn't done anything yet. Today was its first day. Everyone says, Red Dog, what's a day one? Well, here's a day one above a downtrend, so let's see if there's a day 2 or 3. So this was a day it woke up. It's tried it before, tried it here, couldn't go. Tried it here, couldn't go. So this time maybe with the market acting a little healthier, it gets going. So just wanted to point that out. And really, it's February 5th. So that means we've only had about 5 weeks behind us. So if you feel like you've missed everything, what did you really miss? You missed a range that you could have made money, and I know that it's been elevated down, elevated up versus escalated, which is a little easier to handle. It's been very spurty. There's been air pockets. It's been thin, but there's been things to do. And we talked about when I was getting bearish, I'm thinking about, why am I so bearish here? Because you know what? I was actually, people were annoying the hell out of me on Twitter saying, Red Dog, you never get short. I almost wanted to prove that if we broke the SPX here, I could be short. And it did look as if it was going to break here. So I was like, okay, I was short on this day. I'm like, I'm going to get a big short here and prove to everyone that, I can short and I can make money. And, I'm not just a, very comfortable long, because that's typically the way I make my money. You can find longs out there, you can find shorts out there always. But I tend to like a portfolio approach with multiple positions and hedges and breakouts and using a tier system, which we haven't had for a while. So I've been tactical because most things were below the 8 and 21 day, and just taking trades, doing the red dog reversal trade, the H sell setup, and into here, look at the chart again. I was like trying to prove to everyone, I go, okay, look, if this pattern ignites, I'm not just going to be there for a day trade. Okay, I think this measured move, with a clean break could take you down to 1920, but that was just if it took place. That's when that happened. So I remember tweeting around 1995 when it came back above it. I'm like, I covered my short, and people are like, oh, you're so quick. What are you covering your short for? You're such a scaredy cat bear, blah, blah, blah. So instead I didn't go long because I didn't want to be made fun of the next day if all of a sudden you had a red bar like this, a green bar, because you had a red dog reversal here too. I had some longs into this. So the last thing I wanted is that to happen again, and then this happened, and they rarely do the same thing twice, and then that happened, and I'm like, oh, at least I didn't just roll up my shorts, but now I'm going to try and find a way to get into some longs and do what I do best, which is holding positions, trading around it, finding relative strength, and thank goodness, because some guys who pressed here, they're probably covered into this, or they're praying into the jobs report tomorrow, so we'll see. So I guess the moral of that story is do what you feel comfortable. Work on what you need to work on. Like I could make some money short and I could be better on that side, but can't take me off the game of what I like to do. And again, a thesis and idea is only tradable if the market confirms it. You look here real quickly at the TLTs. I talked about it breaking the 8-day and the accelerated trend here, and guys in the TLTs were kind of bashing me. They're like, oh, it's just a one-day wonder, da-da-da-da. I'm like, well, if you follow a trend, here's the 8-day. The 8-day, it's been riding since December, the 8 and 21-day actually. So if you trade trends and you look for changes, something changed here. Get the hell out of the way. Came into this, it was actually a good trade for some because people bought the 21-day. If you sold it into the strength here or you got out here at around 136, 3 points lower, that's a spot to try. And now today, it closed weak right on the low. So if we do get a good jobs report or a strong jobs report and rates tick up, this is going lower. And then all of a sudden, it's below the 21-day, which it hasn't been for a long time. So just, you're allowed to switch gears. You're allowed to use charts. You use other things as well. You could use your moving averages. You could use your stochastics, your Bollinger Bands, whatever it is you put. I consider myself a cocktail napkin technician because I don't have too many analytics because one usually negates another, which negates another, and then all of a sudden you're, information overflow and you never act. Bottom line is good chart. You have your open, close, high and low. You have whether it's tight. You have if it showed relative strength when the futures went down, or if it's, futures went up and it didn't act well, then you know how to deal with it, and then you apply everything else there around it and use discipline and make yourself happy. And there's a lot of things you got to do, to make this career have longevity, and it is longevity. It's an Ironman. It's not even a marathon. Marathon is all of that is what? Anyway, I'm babbling. It's Thursday. Go out for some drinks, have some food, and I'll be trading from Short Hills tomorrow. Bye-bye.